All right. Sorry, people. Can everybody hear me now? Wow. The YouTube just shorted our live, and so I had to go live again. I'm glad that I could see everybody is still in here. That's wild. I'll wait for everybody to jump right back in. Mr. McCohen is back in. Right. We got one person in the house. Enzo, welcome in here. Now I'm getting to see more people come back in. Smith, I understand, right? They shorted us and we had to reopen a new live. They can't get rid of us that easy. I'm just waiting for the rest of the family to pop right back in. I'm pretty sure everybody will be coming in. Um, Leah, how are you doing? All right. Al, tell me something good. Oh, change to what you would like to hear. All right. So as I was saying earlier, before we had the guest Mike only jump on, the Fed, specifically the member Barr, was saying that it's senior leadership that failed to manage basic interest rates and liquidity risk, and he was pertaining to as far as SVB, the Silicon Valley Bank. And basically, what he's saying there is that the executives and the top leadership position in the bank were basically issuing out more than they can handle. And now that the interest rates are a much higher uh, rate, that's why you see here basic interest rate and liquidity risk. So that they were going about it because in 2021, for the entirety of the end of 2020, the second half of 2020, the entirety of 2021, banks were just issuing out easy money policy left and right, so many things. Well, obviously at 1%, 2%, 3%, now being in the fives and the sixes, that's the amount that they have to themselves pay off to the Federal Reserve, to the Feds. They're already taking massive losses on these on these transactions. The bank itself, even if the client is doing their due diligence on it, but now as we're getting more stress on the entirety of the economy, where people are getting laid off, those same people that are paying monthly payment, like mortgage rate payments and stuff, to basically own their home, when some of these people start getting laid off, payments are not going to be made. Eventually, that's going to lead to what? Foreclosures, people being kicked and thrown out of their homes. And even if they were able to be fortunate enough to some other ones that don't get laid off, the high inflation is eating away all their income that is coming, because inflation is over 5, 6, 7, 8%, and that's just what's reported us with these new made up mechanics that they're using to give us this give us these rates of inflation being at 5.2 or 5.1. Reality, personally, for me, I think, and a few other, like even Mike own thinks that they are at a much higher rate, perhaps 8, 9, 10 percent in actuality. They having that, even if these people are getting raises up 3% their pay, that's nothing, and that's dwarfed compared to the amounts that they have to pay out there. Because if you're getting paid and you get a raise of 2%, and now cost of food, cost of rent, cost of everything, cost of the mortgage loan, the payment, even if it was at a fixed rate, at least if you catch something there, but cost of energy, cost of just about anything around that you go and take care of, it's going to automatically give you so much pain that you would feel like, okay, you got a raise, but it's not even good enough. And when you come out to ask for more, you're going to be the person that is greedy, or they're going to label you as the greedy individual that is asking for more. In reality, you're not. You're only. You're correct, and you're only asking for what's your right. Now, let's speak. Jumping away from Bar and basically what's happening with SVB. The key takeaway I want all of you to walk away with from what Bar and what's happening with Silicon Valley Bank is that while it was in March, it's not in the past. Now you have Silicon Valley Bank still looking for someone to buy off or take care of its assets and all this stuff. And while just this last Sunday they were coming to a deal with another entity, it looks like it's off the table now because they're exploring again and looking forward again for things. You will see in a bit what I'm talking about as far as what other bank later on in the stream are also screwed up, and they're in heavy, deep waters, and soon we will see it. So basically, we had today also another thing. The dollar basically dipped as Powell testimony disappoints hawks. And you'll see here about the US dollar fell against a basket of currencies on Wednesday after Federal Reserve Chair Jerome Powell's comments on the central bank's on rate to lower inflation failed to live market expectations. And that's why we saw a small downturn market and looked red. And you would expect things to happen tomorrow differently by Friday. I personally think that I'm personally seeing so much bullish price action that is actually, even though today looked red, and the sentiment of this stream, this live stream, hints at crashes and all that stuff, but the crashes, in my humble opinion, are coming down the pipeline. Right now, we have to deal with what's in front of us first. Just for now first. And I think that in the near term, perhaps by the end of this month, from now towards the end of this month, you'd have like the SPY or the stocks like Nvidia or Tesla continuing to make their runs again to the upside until the actual downturn is around the corner. One thing I want everybody to remember is that the SPY will roll dividends July 31st. That's pretty important. SQQQ also rolled on July 28th of this upcoming month. And those are important dates because when the dividends get rolled out, normally you tend to see a downturn in price action because, you know, they're giving out money. And that's what happens when dividends gets issued, any company or any basket. So that's a big tip for everybody that's in here so far, because you have to be in the market and constantly trading, whether day trading or trading more than just the meme stocks, to exactly know things like that. Those are key dates that speak a lot, like high volumes. We will look at AMC's chart, and eventually, as we spoke in at the beginning of the live stream, the previous one that was on before they cut us off, the AMC special masters approved that settlement. It's not the be all end all situation. Yeah, we saw the aftermarket selling, AMC having a sell off, and then Ape having a bullish action to the upside. We've seen that kind of set up at least 2 times before other news was reported at a later date. However, it was highly sus to me. I reported to you guys last week in one of the lives that institutions were piling up on some puts, AMC, and it wasn't retail, it was mainly institutions. And seeing that now a week later, this week now, like as of today, get reported that, you know, the news of the special master agreement to the settlement, well, somebody knew about this sentiment a week clearly because they made transactions based upon news that we all didn't a week in advance. So that doesn't obviously surprise any of us. Now, what is the key takeaways from today's talk for Jerome Powell? Here's some things, as you can see, he's hawkish on inflation. The Fed held its key lending rate steady at a range of 5 to 5.25 in its latest meeting, and the most officials hinted that 2 more quarter point rate hikes might be necessary this year, according to the Fed's latest set of economic forecasts. Just days after the decision, 2 Fed officials called for increases, citing persistent inflationary pressures. And on Wednesday, Powell told lawmakers it was a pretty good guess that the central bank would hike rates twice more this year. And that's what he's basically telling them now. That those twice are this year. He's is saying it as a hint. However, they could be combined as in one big rate hike, or they could give out two rate hikes. One being at both being at a quarter piece, or one maybe at 5, or I mean half basis points, or and ultimately add later on to it throughout the year higher. And again, it's just anything that they add on to this mess now. The banks are already in so much stress. They're highly counting on the idea of taking rates off, start unwinding their for the Feds to start unwinding its balance sheets, doing stuff like that so they can start breathing and perhaps get back to floating waters. But now when they hear stuff like this, that we're going to hike rates at least twice more this year, it's unbelievable. It's unbelievable what's going to be the ramifications to that. And there are ways that you could protect and take care of your family, yourself throughout this. I mean, where it's looming gloom for some, it's opportunity time for others. And you're not the bank, you're not the person who's in hot waters. So that in other words, any of you in here, any of us, is potentially staring at a big opportunity. It's just how you will go about it, and how would you deal with it if it was to come out, and how could you prepare for something like that? Another thing that he said, but he's quashing any fears about mass job losses, which makes almost zero sense. You would see, I hear him saying, I caution against any approach in monetary policy that ignores the Fed's maximum employment mandate and results in a recession with millions of people losing their homes and jobs, said their Representative Maxine Waters, the committee's ranking member. Now, Powell responded to those kinds of remarks in the same way by reminding them that the labor market remains strong by many measures, similar to the banks being resilient, and that inflation is very transitory. As we all know, is completely not true. We still have historically low unemployment rates and high employment rates now, high participation in a very strong labor market. And basically they're saying that they're just waiting on the data to be rolled out. New regulations on smaller banks is unlikely. So basically he's also saying in here that excessively high capital requirements will constrain credit provision to the economy, costing jobs, incoming opportunities, and living standards. And New York, he's basically Mike Lauer, who's a New York Republican. Now we also have during this period of this next year or two, we're getting inflation back down to target, and the economy is kind of normalizing. I don't think capital changes will have much of an effect in the near term. Powell added that higher capital requirements aren't a key factor in how the central banks look at inflation. So basically, ladies and gentlemen, this is important. So basically, he's saying that I don't think by having higher requirements, liquidity requirements, would solve anything in the near term, because that's basically how the Feds are saying they're propping up the market, or in other words, the people screwing us over as far as a meme family. He's basically sticking true to the guns to actually helping them out, because we know that if these characters, these banks, these institutions, were to be required to have higher capital requirements, and increase the risk assessments on them, then obviously they would have to cancel out, or they would be unveiling a lot of horrific things that they know of, similar to the SVB situation when they knew about it in 2021 and only spoke about it now. They specifically said, Barr said that they knew about it all along. They just didn't do anything about it. And that's what basically Jerome Powell is doing here, in my humble opinion, is that he is sticking to the ideology of, if we do anything about it now, it's only going to be making things happen, or the economic crash, much sooner than later. And they're basically playing along the music right now. They know that the inevitable is coming right around the corner, and they basically are saying that we should just no right now until we get to around the corner. We're good until we get to around the corner. And that's basically what the key takeaway from what he answered there with that response. And then he keeps jumping right back that inflation. And now he says more about everyone is waiting for the data. That's his way of also running out of sticky situations, So like, he might see it as whatever you ask me, he just goes back, oh, we need to make sure that this inflation is transitory, and that we can go ahead and bring it back down to the 2% levels. Jeffrey, what's up, brother? Keep dates a focus. The longer they push out a date, the better for us. That is very true, Al. Now that we got him out of the way, let's get to the spicy stuff. Let's get to the spicy stuff. We got the report that basically, and you're probably wondering, what is making Bitcoin? This is why I said, even in the title of the live, you're witnessing the actual official of crypto right now, right in front of us. And it's so hilarious that we were just speaking on a previous live about, and I was telling people how the smart way for basically that what I do personally is how I preserve wealth is through actually particularly Bitcoin, rather than even putting it in a bank or out there. Because in Bitcoin, your money in the long run is not only looking to grow, but it's preserved wealth against inflationary purposes, because you have in any other currency that your wealth is in, is constantly losing its value. Some currencies a lot worse than others, and to preserve that your wealth, you would have to, mathematically, it makes so much sense in Bitcoin. And speaking based on those logics, those points, you have, officially this last week, BlackRock applied for a spot Bitcoin ETF, renews optimism, sparks wave of new filings. And by the way, I'll tell you how all this coincides with Citadel's new basically exchange that was just published yesterday. So at least 2 investment firms have made new filings for spot Bitcoin exchange trade funds ETFs. Following investment colossus BlackRock's move to lodge a similar application for its own spot ETF on June 15th. So first, it started out with BlackRock. That initial news gave the push that you've seen on Bitcoin and throughout the crypto sector. Now, many other companies, now you have Fidelity is rumored to be trying to buy Grayscale, the app, so that they can initiate their own, Bitcoin ETF. And many other firms similar to this, New York-based asset management fund WisdomTree is the most recent investment firm to lodge a new filing for a spot ETF. According to a June 21st, which is just today, filing to the United States SEC Commission, WisdomTree requested the SEC allow it to list its WisdomTree Bitcoin Trust on Cboe BZX exchange under the ticker TCW. And if you look here, it's WisdomTree applied for the spot Bitcoin ETF twice before. Its first application was rejected by the SEC in December 2020. Its second application was rejected once again in October 2022, just not too long ago. Then we got with the financial regulators citing similar concerns of fraud and market manipulation at the time of publication. WisdomTree oversees approximately $83 billion in assets. One of the key differences with BlackRock recent filing to the SEC is that it intends to enter into a surveillance sharing agreement with Chicago Mercantile Exchange CME futures market. So that's like basically here's where the funny part comes in. So this big fund that's called WisdomTree, it's 83 billion, but while that's big to many people, that is very dwarfed by somebody or a giant in the magnitude of BlackRock being the biggest money management in the 10 to 12 trillion dollars that they have in assets in under management. So they're two different people. Now, when you see this funny thing that I saw down here, just for a fun fact, and this is Eric Blackness shared, he said, fun fact, BlackRock's record for getting ETFs approved by the SEC is 575 to 1. That's another reason this is so big, because obviously they don't play around. So the fact that BlackRock, in other words, put their hands or fingers on something is going to get done. You got 10 trillions plus. They technically own the majority of the globe under your management. You're not going to be told no, and I wonder what that 575 to 1 is. Probably that one is all the way probably perhaps back in before even the 2008 crash, because the CEO or the commissioner of BlackRock was a core piece into deliberating and trying to work out the ethics of how the whole 2008 back then was going to happen, of trying to bring somebody in to take care of the Lehman Brothers and all that stuff. It just didn't happen. But CEO of BlackRock is not only respected on Wall Street, some revere to him as the most powerful figure, rightfully so, along the lines of the people like the JP Diamonds, the Jamie Dimon. And at the same time, he is brought in, similar to Madoff back in the days. He is brought in, be a consultant, and they ask him. So basically, you got figures in the government, even in Congress. There's videos that I remember back in 2008 where senators were actually saying that they were bringing him in to go ahead and direct him through the whole process of how to work their way out in the downturn. So this Larry Fink right here, let me show you, if you haven't seen this guy before, I want to show you guys the face of this person. This person is you probably haven't heard much about him. You might have known the name, but he's if not the most powerful individual on Wall Street or in the nation, he's one of the most powerful. Because he's the most powerful person on Wall Street. Look at this one here on Google. He's the chairman and CEO of BlackRock, the largest money management firm, $9 trillion in assets under management. So here is what Larry Fink looks like. basically this guy. This guy has a huge backstory. Like one day we would talk about it or break it down, but he came around Blackstone. That's where he started out at, and he came out of from the underneath that shadows. Then he went and partnered with PNC Bank out of anybody so that they can help him get funding and then go about things. Ultimately, he dwarfed everything around him and was able to eat up everything around it now. He's the person who actually put so much constraint on the ideology of risk taken and how to use quantitative methods to actually reach into what we see today, that Citadels and all of using. This is the guy who brought these things to the forefront. So now that you see that many of these Fidelity are rumored to be applying for a Bitcoin ETF, you're probably wondering, what is a Bitcoin ETF? Well, first of all, ETF in general. Once you get or understand the ETF, then you would know what Bitcoin ETF would be. So an ETF is a basket investments that are exposed to Bitcoins or have a lot to do, something to do with Bitcoin. Now, if you trade in that Bitcoin ETF, if you just put your money in there, so you would have exposure to everything else by just investing in one thing. And here's where the whole play comes into what's in it for them, basically. What's in it for BlackRock and them, or even Fidelity, whatever. Because they're the ones who's technically managing the fund, the ETF. They're making the decisions on it. And that's when, if you don't want to deal with it, you would go and invest in something like, why is that something that has everything to do, in the same time nothing to do with Citadel's situation? I'll show you here. You have here an institutional crypto exchange backed by Fidelity, Charles Schwab, and Citadel Securities launched today, which was yesterday. And if you see here, EDX Markets, that's what it's called, a non-custodial cryptocurrency exchange backed by Citadel Securities. So basically, what makes Binance a problem? What made all these other Coinbase a problem? Is the problem with them is that they're all custodial. So basically, if you are with Coinbase or Binance, you would technically be buying your crypto on there. They would have you have, but they have access to everything. It's parked as they're the custodians of it, like a broker of it. So if they ever or a downturn, you basically lose your coins, and that's what they had as an issue, and that's what makes EDX slash in Griffin's cryptocurrencies market making machine here, EDX, something completely different. So as you see here, EDX differentiates itself from traditional crypto exchanges by not directly catering to retail investors. 1 second. See that it's telling me that the battery is dying here. You just stick the charger in. Okay. And by basically the EDX not being like a traditional crypto exchange, by not directly catering to retail investors as it focuses on institutional traders, that's when you'll have these ETFs, the BlackRock's ETFs and all that coming into play. It's so hilarious how all this is coming around at the same time. A lot of people in the community here in the family, we're thinking that this is something that we're like BlackRock and Citadel are going to be against each other in this upcoming situation, but instead it's actually totally quite the opposite. It's them working together and in each other, while this person is the custodial or the custodian of all these assets or people or institutions that are investing in these ETFs. Citadel's EDX will operate as the exchange that would allow all of these players to go ahead and do all the trading and do everything without Citadel or EDX controlling or having their Bitcoins or their transactions in. Now that's directly. Here's where this is not good for people as far as retail to get into or jump into. So you have WSJ reported that it relies on retail brokerages to route investors' transaction orders over cryptocurrencies to its marketplace. EDX chief executive Nasralli said FTX failure had heightened demand for crypto exchanges that do not possess the inherent conflict of interest associated with the storing of customers' funds. So basically, Citadel will not be storing the funds. You will always have it on your own wallet, but what they will have, and this is what they will not say in here because ultimately this is what it's about, they will have a backlog, indirectly know all the transactions and what's happening, ultimately making it what the government have always wanted. Just basically centralizing the crypto blockchain by knowing where the transactions are going. People in Bitcoin will basically with this be able to do what they got to do, however, and keep their wallets with them and everything. However, this exchange will give access to anybody at some point. Let's say you steer to the right or steer to the left, and a powerful individual or entity or a government does not like what you're doing, where you moving or how you going about things, or your money that you're investing or you're spending, they can actually reach and be able to get into within through this, because EDX does not possess your assets. However, they have all the keys to it, so that in case they ever need to go and fleece you completely out, they can completely do it. They could completely do it at a click of a button. And next thing you know, you're like, oh my God, I thought I was clean, or I was away from the bank's problems. Now I'm dealing with this even in the crypto sector. That's what it's all about. So EDX is not registered with the SEC list, only for crypto assets. According to the website, EDX supports spot so far for only Bitcoin, Bitcoin Cash, Litecoin, and Ethereum. And all this EDX is still not registered with the U.S. Security and Exchange Commission. So the SEC is still saying, no, we don't agree with crypto. It's all this stuff. But surprisingly now that BlackRock has a Bitcoin ETF at the same exact time that EDX gets launched. Surprisingly now, I feel like we're going to have complete change or shift in the stance of the SEC. And surprisingly, in the coming months, you're going to see allowances being given an easement on that stance with obviously EDX as a market maker exchange in that sector. And then you will have a bunch of these ETFs, apps that are backed by conglomerates and obviously people like BlackRock. This guy goes to this guy and they get their business done. This guy doesn't feel like, harm this guy, because now BlackRock would have an exchange that they could go to without having to worry about and bring all the exposure that they bring in amounts of billions and trillions without having to worry about anybody either hacking the blockchain from anywhere. But in the same time, we always know exactly who's doing what and where it's going and how it's going, and control all the aspects of all these things. And obviously here shows that Wall Street firms remain interested in crypto. Meanwhile, the group of financial industry giants backing the exchange shows that Wall Street firms still have a massive appetite for the emerging industry, despite the US SEC approach. You would have here last week, BlackRock basically did the talking about here. And then now you got an unconfirmed rumors later emerged that Fidelity was considering a buyout of Grayscale or an application for Bitcoin spot ETF. So now Fidelity is trying to buy their and create obviously their own as well. You see all this demand happening here. It's going to be a no-brainer that that's coming right around the pipeline. And this 100% clarifies why you've seen the surge in the crypto realm. And I think within the next, perhaps, and again, I'm not an advisor, so we're always reacting to what we see. However, but looking at these, formulate a picture. And I think that by looking at all of this involved, understanding the magnitude of these things that are happening, as soon as you get an SEC slash an acceptance from the lawmakers for the crypto realm, it won't be like, it would be really soon right after that where you would see crypto like Bitcoin or even Ethereum going to horizons where, like, the surge of the cryptos, if you remember early 2021, late 2020, remember those weird days when Dogecoin was on the run, Bitcoin was on the run, Ethereum, almost all the cryptos. That's going to be, in my humble opinion, relived here soon. When exactly, I can't tell, but I do caution everybody to understand that it's not just going to be every crypto. This is why you got to be careful. Many of these cryptos out there, or blockchains out there, are nothing but Ponzi schemes. The only thing I could personally, my own, and personally, and I'm not, again, advising anybody to do any of that, but just me personally speaking, I put it in Bitcoin. Let's see if we have any questions. And if you guys have any questions, feel free to put them as I'm going through with this. Welcome back, Patriot 1796. Let's see here. We're not going to go through this one as well because read most of it. And now you got this. The Fidelity is rumored to follow BlackRock in filing for a spot Bitcoin ETF. Only thing is, after BlackRock announced their efforts to open what to be the first ever approved spot Bitcoin ETF, investment giant Fidelity is rumored to be doing the same. It is also rumored that the firm is seeking to purchase crypto asset manager Grayscale in a major push further into the crypto space. And once you see stuff like this, I don't know about you, but when I see stuff like this, I would go and look and see if there is any fruit to that talk. Oh my God, I would definitely jump on a potential stock push if Fidelity truly acquires Grayscale. There is obviously massive returns that could seek here for the common investor, And here's, before I jump to any charts or even answer questions in the chat and all that stuff, if there's any, here's the moment where I told you that I've seen some crazy movements that no one yet is reporting, as it's just very fresh. I've almost destroyed the chat. You've seen, I've the live stream. So now, there we go. All right. Almost literally kicked it away and destroyed the whole live stream. So the big news here is I personally have seen fresh news on this particular bank. I've seen major institutional heavy volume basically jumping on, loading up massive amounts of puts and shorts this particular bank, and they're all played out toward somewhere along the lines of toward the end of this year, all the way leading to January of this upcoming year. However, me knowing how options work, when institutions load up, and I'm talking about in the millions, on options like this, you always buy out far deep into the money and then far expiration date, so that the delta and the theta decay doesn't kick in and kill out all their premiums. So basically, they would be, in other words, you would be expecting this thing to happen somewhere fairly soon in the July-ish, August-ish period, because it won't be all the way until the last moment in any of that. So that's my experience as far as seeing when institutions jump heavy in something like this. When I talk about heavy, I'm talking about millions on the basically demise of this bank, believe it or not. So here's what we have. It's not Charles Schwab. So be ready for this to break to the downside. So now I know many of you are probably like, okay, let me go and add this to my trading list and keep it on the horizon. Well, here, as this says in summary, this article says, we have happily forgotten about the March stress. Underneath the surface, the pressures continue to increase for Charles Schwab. They just downgraded their outlook again, and the street gave a yawn. Don't expect the same reaction once the next risk-off period starts. Looking for option income ideas that focus on capital preservation, I offer this and much more, my exclusive investing idea service. And then they'll tell you like where to go to for their own website. Now, markets have short memory. Seems that it was just yesterday that they were actively fretting over bank runs. Today, we could only be interested in news if the story had AI mentioned in it as the cause. Charles Schwab Corporation, also part of this herd behavior. The stock fell sharply in the early part of the year as everyone suddenly realized the extent of their duration mismatch. And you'll begin to understand now what I'm talking about as we go through this. Since then, we have traded water, and stock in near and is near where it was in mid-March. But things are not getting better. We tell you why you should be careful with thinking that the stock is a buy just because it's cheaper. Earnings downgrade, and this is the crazy part right here, guys. So Charles Schwab themselves have downgraded or are downgrading their own earnings. And as you can see here, just from January until May, the downgrading is constant. So the next report on their earnings is going to be, if I look it up right here, July 17th to July 21st, which is surprisingly coinciding in the SQQ index and the SPY their dividends. So food for thought, right? Now, when you're thinking about this and you see how horrific this chart looks, you look down here and say, this is in essence the amount that is no longer willing to give money to Charles Schwab for free. So this dates back to 2021 when the feds were rolling out money for free, basically, and all that. Well, that's not the case anymore. And they've been in stress ever since then. It's only getting worse. So the CFO extrapolated the trend to suggest that we should be good by year's end. Exactly the same statement that the Lehman Brothers CEOs at the time said, and boy was he wrong. This trend carried into early June with the month-to-date pace across bank sweep BDA balances and dealer cash balances tracking similar to May. The trajectory in client cash realignment further supports our belief that this is an activity will abate during the second half of 2023. Which is exactly in the second half of 2023. They're saying that it will go away, but no, it will actually get much worse in reality. Interestingly, even this massive slowdown in deposits moving out did not stop the company from downgrading their numbers for the year. We estimate that the impact of these transitory borrowings and time deposits will more than offset the benefits of higher asset yields in the environment. resulting in our second quarter NIM contracting by approximately 35 basis points sequentially. The combination of temporarily compressed NIM and a smaller interest earning asset base, along with softer trading activity, is expected to drive a year-over-year decline in second quarter revenue of 10 to 11%. That being said, the measurable acceleration in the pace of the client cash realignment activity is helping limit the incremental utilization of the supplemental funding sources. Obviously, they're crying out loud for you here. And now you got this, like Seeking Alpha is basically their outlook. So analysts have taken the week off as we don't see them even following the company's guidance. The estimates for this next quarter are for a decline of just 7.76% in revenues, which is horrific. When you're talking about 8% of your revenues are declined on the year, you're basically screwed. The company itself guided for a 10 to 11% drop, and that was in the middle of June. It is not like things will suddenly reverse by the end of the quarter. Similarly, earnings remain offside, and it is actually reasonable to expect 67 cents at this point and not 75 cents, where the consensus is trending. Here's where things become really wild for them. Every indicator shows the banks are facing increasing amounts of outflows. Deposits fell by $79 billion in the week ended June 7th. Take an objective look at the chart below, showing how much an investor can earn risk-free at the average bank and the average money market account, and ask yourself whether you believe the estimates above. Now, see, here's the thing. Here's what they're alluding to here. So now they're saying that the average investor is beginning to think, why am I putting my or parking my banks? Have you realized that many of these banks slash even your Robinhoods and your brokers are saying you can park your money with us and we'll give you 5%. Or in the brokerages applications, they're saying if any uninvested money, you'll reap 10% or 7% or 8%. Well, these banks, like, for example, Charles Schwab is offering like 5%, which is stupid because when you think about the inflation that we're in, you're technically parking your money there to lose because we're above that rate. And even bigger banks like JP Morgan, I think, is offering a little bit better, but even then still not really gaining much due to the inflation that we're living in. You're technically losing money by parking the bank. So the point that they're making here is very valid. More people now are beginning to take their money, actually are thinking of investing it and keeping it in either a brokerage firm, into mutual funds and things like that, because they can reap more, or an index. They can make more money, and they'll go on and make that point right down here. What we're seeing from Charles Schwab is a pause in the trend. Phillips, perhaps some of this is driven by the euphoria in the market. You are making 100% on your Invesco QQQ Trust ETF calls. You really don't care about 5% annual interest rates. And that's the valid point right there. Similarly, it is paying 5% on an SFHL bank loan. And of course, you should keep in mind that the companies predominantly locked in long-term assets are earning under 3.25%. But they're saying as long-term as in like mortgage-backed securities. Mortgages that are long-term mortgages that are due in 30 years, like 30-year mortgages. They're locked on a fixed rate for under at 3.25% from 2021 easy money policy, or even underneath 3.25%, which again, they're paying over 5% currently on those. So they're losing their asses off, mixed in with the bank outflows, like as far as people taking money out of the bank, is literally fleecing them on more than one front. It won't be a smart, like, it's not going to take an intelligent individual to understand how this story ends there. The math won't be pretty, and this will be made worse if the Federal Reserve does indeed hike twice more, as the dot plots showed. So basically, you're there. We were talking about, and this is why I led you in the story from Jerome Powell speaking, how the Bitcoin is evolving now. ETFs are being made, and EX, Kenny Griffin's market maker system is out now, and all this stuff, and how this also hurts banks at the same time. Could you see what I'm leading you to here? Could you see what I see in this, and it's happening now? We're on the forefront, on the steps of integrating banking as we know it, the whole financial system as we know. The crypto blockchain, we're in the infancy stages. Don't think that this is going to happen tomorrow. Infancy stages, and it's being put in motion. Once you have players like BlackRock, pushing it through, and Fidelity, obviously Citadel, and all these individuals, now you're having there's no way that it's not going to move in that direction kind of situation, and that's where it's moving to. So you're probably asking that question, saying, so you mean to tell me that JP Morgan won't be in the picture anymore, Charles Schwab won't be in the picture anymore, and Goldman Sachs and all of Citigroup? To a certain extent, they're gonna update. They are, as you can see, they all will become players, same people but different players in a new system that could be to their liking, and they could control, because the emergence of Bitcoin blockchain caught them off guard in the early stages of the 2012, 2013, and now that they are coming around the corner to find out how they can centralize it or even control it, you can see that the image is getting much more clearer. And it could possibly be this blockchain where currencies of each country pegged certain crypto. Which one could it be? Time will tell. Now we see this, and this is this is why what they say here in the verdict in this article confirms the data that I saw as far as what some institutions are piling up on. Why they're piling up puts on this bank, basically on the downturn of this Charles Schwab, sometime before the end of this year. So what they're saying here, we told you the first time we wrote on Charles Schwab that it was not cheap. Back in April, when everyone thought the company was a bargain because it had fallen, the estimates were for $3.93 a share. If you're wondering what is Charles Schwab price currently, you would go and look. It's actually standing at $53.97, so at $54, and their estimate is actually for literally $3 and where is it? Right there. Literally, their estimates for it is about $3 and something cents. Now, we think they're still wrong about the direction that they're about to go into. See right there, $3.93. Now, we think they're still wrong, not about the direction, but about the magnitude that they're off by report. So this bank is saying, no, we're going to be good and all this stuff. This article is telling you, and the data here also will show you, that they're not just, it's like in a different complete realm. When all this, when all is said and done, Charles Schwab will likely generate $3 of earnings this year. So it is trading right now at 16 to 17x our estimates after a 40% stock price drop. So even after the 40% drop in price, because it was in the 80s and the 70s, $3 of earnings this year is trading at, literally right now, if you do math, it's trading at $54. It's trading 16 to 17 times X its true value. And this is a lesson right here for some of these fundamentalists out there that say you got to read these fundamentals, these financials, and all this stuff. While that's true, as you can see here, you got something that is overly inflated and overly not fundamental, yet it's it's trading at an unfundamental weird value, perhaps because it's not a meme stock. Oh yes, 327, fantastic. As we showed above, the numbers, even the quarter ahead, are so awfully wrong that the only analyst that might get 2023 right is that genius who's predicting $2.87 a share. The actual final numbers are rather irrelevant, though. That is relevant to the trend, and the what it is relevant is where it will throw, and what will be the quarter on an analyzed basis. We think that it will be 50 cents at some below 50 cents at some point in the next 3 years, and that is best case scenario. So $2 in annualized earnings is where we are headed. $54 stock. You do the math. We had neutral ratings last 2 times. We are now downgraded to a sell. This is huge, people. This is huge. I was AB saying that tomorrow Charles Schwab is going down to the bottom of the barrel. No. But this data right here, this hearing this, reading this is like, okay, forget the source of it being seeking out. They're not reporting on AMC. We know how they are when they deal with AMC or GameStop. But on this corporate stock, or in this Charles Schwab entity, they're not going to basically sugarcoat anything. As you can see here, all this stuff is backed by data. Now, really made my flip was I saw the sheer magnitude of the amount of institutes that are loading up on what's on this bank before the end of the year. I was taken back. Now, I know some of you gurus out there are probably thinking, well, you know what? Okay, you're not a financial advisor, AB. We're just going to go do what we got to do because it makes sense what you've shown and what you've seen and these receipts and all that. However, you got to remember, these institutes by far deep in the money. So like their premiums are extremely expensive, premiums that basically we tell most likely will never buy or afford. They're okay with that. That's why they put millions and millions of dollars on these premiums, so that their particular expectations might not be a stock fall 54 all the way down to $3. It could literally be the stock fall 54, 51. They could be in major. Even if it falls to 52, it will be in major profit land because their break even would be so easy to target, because their strike is the money slash if you add the premium that they paid for those for that strike price, you add that together. Now you know exactly at that point what their break even. They could reach that, like I said, easily, especially if the decay is far out till the end of this year. So if this trend takes its place in July, when they report their earnings, or perhaps in the next few weeks, then they could get rid of all these puts at a much lesser, at a much bigger profit, but they don't even have to wait until the end of the year. So there's always that risk also that we don't know of, that they perhaps know, that they could also be playing this like this, and there could actually be a big major crash coming right around the corner. Such bank, or a few other ones, but mainly this particular bank, completely get wiped. So either way, the data points to the ideology of downturn. Yes, how big of a downturn? Time will tell. Institutes won't put their money in such a massive way. Let's see. Dennis, yo, what's up, AB? Appreciate all the knowledge you're spilling to us. Well, I appreciate you guys. Thank you so much, my friend. Tater Tot, it's been a while since I've seen you, my friend. AB, Reds are on fire. I know, right? No one have seen this coming. No one able to foresee this coming, actually, in fact, because they were, you know, we were the worst at the beginning of the tournament or the season. And we didn't have any players. We shopped them all out. So it's remarkable that we're here. So I don't want to jinx us. So hey, hopefully we'll continue the uprise. We go somewhere far with all of that. So we spoke about many things, my friends. Now it's up to you guys to basically tell me what should we do with our remaining time. You guys want to look at some charts? You guys want to see what happened today? Maybe we could see something together that we didn't see happen. Tell me, family, what do you guys want? What y'all want? What y'all want? This is the spice chart. See, I want you guys to look at this. Right now, literally, like, oh my God, this is crazy. So, right now, the SPY is actually sitting straight up. You see how this candle right there is sitting at the support level right there. As we can see, back in on Tuesday, it reached this level every time and bounced right off of it. And then it came back. There's a gap right there. I think it looks like it got filled up on this right rip up there. But it re-met that support level again right here, as you guys can see on Wednesday, the very next day. And we bounced off again throughout Wednesday. And now today, toward the end of the day, we basically went right back up again. We had a little nice rise. This is all when Jerome Powell is basically giving the market its the Jerome Powell treatment. And then you see here toward the end of the day, we came back to sit particularly on that resistant. It's so beautiful to see the setups like this, because when I see things like this, it's like right now, all I'm waiting for is some sort of either a doji candle right here, or at opening tomorrow, I'm looking for us to either break this resistance, which will indicate some of the price action will indicate to me if we're going to have, that's it, a downturn. Because if we break this strong support right here to the downside, and we could possibly look at something. Second, something can show us something. Tracement. Okay. Okay. So now looking at this, John Juan, do you game? As far as what? Like baseball? I'm not much into baseball. Now I was big into soccer and basketball and football. So yeah, I do game that. So as we can see here, we have, if tomorrow we get something along the lines of this, SPY was to fall down to the 434.5, which right now we're at 494. So if we were to fall for about 60 cents, which is easy in the SPY, that would still not be meaning that we are going down to the downside. That's a weak retracement still. Once I see it get in this range, anywhere underneath that, anywhere to the 432 and all that, as you can see, that's when I will, as a trader, that's when I will start to worry a lot, because again, all this is just a couple of dollars. The SPY can move anywhere between the ranges of $3, $4, $5 in the same day, up and down. So obviously, if it goes right in this range right here, anywhere breaking to the downside, the 432 level, like 432 and 50 cents and beyond, at that point, I personally, if I was day trading, and again, this is not financial advice, this is what I do as a day trader. At that point, that's when I will lock out of position, because it's not going to be any bullish action. That's how I read the price action to this. But I don't honestly see all this massive sell-off, including Powell speaking tomorrow, that could possibly send us somewhere in these areas. I don't see this massive red, us falling right here to this massive fib retracement. If I see that, then I know that we would be perhaps heading toward more. Instead, what I see is us bouncing right back off again. I think continuing tomorrow and then into Friday, continuing to move up to what will lead into, ultimately, I think, a not only breaking the 52-week high, but honestly, I think we're any downturn comes, and this is just a personal opinion. It's not reality. It doesn't have to come true, but if it does come to fruition, then some of my trades will be extremely excited. Because today, because of the volatility that I was telling you guys about yesterday, it was a wonderful day. I've had some beautiful trades with NVIDIA. I've had some beautiful trades that paid off with the SPY. Amazing. And right now, I still have a couple of trades open on the SQQQ and the VIX. The SQQQ is already massively in the green for me, but I haven't shut them off because I don't think we're done yet. I think that I could probably let them go either tomorrow right here and re-enter again as it drops again, or if the price goes up, then it will be the inverse. Obviously, then the SQQQ will be dropping even more. So I might want to jump out, collect my profits, then jump back in once it's the next time back down. I see here even on the see where's the RSI. Take the Fibonacci retracement. It's amazing what happened with it today, like the drop and the red that we've seen in the market. It's just fantastic. So now, looking at the RSI being at in the 30s, this is normally when the market starts rebounding to go right back up to the higher part, because normally it's sell off somewhere around the 70s. I think we had consolidation right here, and ultimately I think that we might test down a little bit more on the RSI, going down to about the 33, maybe perhaps 36, 37, 34. But then eventually, in my humble opinion, I think that we're going to rebound right back up. I don't think it's time for the much coveted and awaited for crash just yet. PVV, how are you, my friend? Let's look at AMC. You guys want to look at AMC? Tell me. If you guys want to, we can look at it. If you guys don't want to, we don't have to. So right now we're preparing for We had like about a 7% downturn in the after hours. We're sitting at $4.19. I can actually do. See, the beautiful part with AMC chart, when I'm looking at it, like there's many things that I've said about AMC and resistances and so many things that we've talked about and moving averages and all that. The beautiful part is that the chart have just about filled literally almost every gap that it had, except right down here. This is something that I can see right here back in April. It's the $4 level. Oh, this is interesting, guys. This is really interesting. This is very interesting because right now this is a 454. It's not reacting to the aftermarket effect. So we're technically going to be somewhere right here. I think that it's going down to fill this, perhaps before to the upside. You know what, guys? This is again. I just looked at the this chart right now with you guys on live. Hell yeah, people want to see it. Hell yeah, I see it in the chat. Yeah, this is interesting, guys. Knowing that charts don't like gaps, like it could literally be coming down to test this right there, and then eventually move, perhaps right back up based on whatever news that's around the corner that's coming up. We've seen that set up more than twice before, where they said something about the reverse stock split and that it's going to go through. APE moves up, AMC moves down, and then next thing you know, the settlement gets pushed off or it's not accepted. And then what happens? APE goes back down, AMC goes back up. So this could very well be similar setup. I think that in the next week time frame when this is supposed to be rolled out, or even if it waits all the way to the judge's decision, I think that somehow we will reach this somewhere in these levels, perhaps the upper three. Do you guys remember a few months ago I warned you and I've told you like we could see the upper threes, perhaps in the threes? I don't know if any of you in here could remember that. It's crazy how that's happening right now. And ultimately, I honestly think we're filling this gap, and whatever news that's going to come out somehow is going to coincide with these technicals. And eventually, I think that we're going to up. I just hope that it doesn't coincide with the acceptance of a completely the stock split the way that is set up and the conversion as is. And eventually the natural price of the chart would coincide with the technicals as well. But either way, to the upside, to be imminent on the horizon after this downturn continues here, which is probably by the end of this week. You're going to take it from me here, guys. You're going to hear a lot of these shills that are out there coming at you crazy over the weekend. This is going to be one weekend to remember. You're going to have a lot of people identify themselves as major gurus and else and what have you, ramp up their attacks, all sorts of things, and eventually they're going to have some sort of loud their resumes for this upcoming week, leading into judge's decision. What else do you guys want to see? Let's see this actually on my other chart. Excuse me. See this on Webull. see order. Okay. Chart. Settings changed. Time we have this now. That sucks. I hate reading charts in while. Yeah, I think you're definitely going to hear a lot of people saying that. PV. Let's look on. Let's look at the after hours as well. See, let me take the extension off. Look at this right here, this point. This is where we're the close. Now we add extension hour after the aftermarket. You see how it dropped right there? Let's look at this. This is the gap right there, this area. Right here. This is the gap that we basically have to fill. We were coming down in the after hours to perhaps meet somewhere here. The upper 398, maybe perhaps 402, some change. Might have an overly aggressive pullback, just a little. Upper three is like 388, 390. But technically, on a technical level, like this still looks like we could do some wild stuff getting back into this channel. We were also sitting at support and a resistance level right here. Through that line was also a support that every time we've met, since May 31st, we've constantly broken out of it. It looks something because there's something that is honestly, believe it or not, yeah, while this is a one big momentum red candle, it's not the best thing to see into a new trend. But I'm gonna see how this goes and works itself out weekly on the end of the week, and perhaps next week. I feel like something else could basically happen to bring this price back up to a certain position. I know a lot of people don't have the most faith right now, but I would urge single one of you guys to please, please, please don't overreact currently on the news that you're seeing. You have to go through the documents and read all of it. At the same time, don't advocate ahead of time, because nothing, even if the special master, as the articles say, that they're agreeing with the settlement terms, does not mean jack shit. Like, it could still, judge would still have to decide on it, and the judge could easily come out and say, well, I don't see that. Of course, the likability of that is not the highest, because that's a special master that the judge herself have appointed. So see what we would see in the readings, and what we would see and what will happen from next week, mid to end of next week, is going to be very, 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 very crucial and important. So I want everybody to keep up spirits, please. Been on GME, this is a bullish setup, right? See, basically on the same algorithms. It's like a bullish pennant. All right, it's 1:30. There's another important day. Been taken care of. Do you have any questions? This whole time I was looking at my other like chart, the Weeble chart, and the screen was still stuck on Trading View. Sorry, family. All right, family. Well, there isn't any questions anymore, so therefore, leave you guys. Have a great rest of your night or morning, beginning of morning. It's 1:20 here, Pacific time. I gotta go get some sleep so that I could wake up right around before the market opens, so that I can do some trades. It's already a wrap for pre-market here, so I basically want to wish you all the best of wishes. And again, we got to stay strong through these next few days. And I think things are right around the corner for all of us. So positivity attracts positive outcomes. So that being said, thank you all for sharing this wonderful stream with me tonight. Thank you for giving me your time, and thank you for most amazing community any person would wish to ever. On that note, much love.